Hey everyone, and welcome to August Tax Tuesday. My name is Heather Ryan, and I am also known as the Tax Queen. I have a firm called the Tax Queen, and it is supporting our viewers, digital nomads, in their tax situations, whatever that may be, and whatever that may look like for you, right? We each have a different thing. And each Tuesday or first Tuesday of the month, I like to answer questions for free. So this is just a time for anyone to get questions answered. You do have to submit them online beforehand. If you are here live, feel free to jump in with some live questions. I do have a few to go through first, and then I will get to anything live. If I don't see any live questions, then I will jump on, or rather jump off and close the session. So I try to keep it short if I don't have a lot of things going on. So if you are here, feel free to leave a hello, where are you coming in from? I am currently sitting in my van in the state of Washington on the Olympic Peninsula. It is a typical kind of rainy, drizzly morning. Feels very Washington. Anyways, I'm gonna go ahead and get started with the questions that I did get prior to this today. And the first question is, we are married filing jointly a South Dakota domicile, and unless we work in the state that taxes income, we do not submit a state tax return. Several years ago, we purchased a winter home base in Yuma, Arizona. Around that time, in order to meet the ATF physical address requirements, my wife obtained an Arizona driver's license. All our bank and investment accounts, vehicle registration, insurance, mailing address are still located in South Dakota, and the husband still retains the South Dakota driver's license. Because of the driver's license, does Arizona have a claim on our wife's portion of our joint income? Ooh, this is actually an interesting question. I have never seen someone have a state license other than their domicile. That could be a tricky situation because you also own a home base in the state of Arizona. So Arizona could possibly claim that you need to be filing in that state. Um, that one is not something I've ever run across before. And yeah, that is definitely an interesting question. I don't know how strict Arizona would be. That is something I would probably just hope, file with South Dakota and hope that Arizona doesn't catch up. You're not spending, if you can really prove that you're not spending, majority of your year in Arizona, even though you have that home base, I don't think Arizona would come after you or would be that strict. So, hey Pam, welcome from joining from Nebraska. Very cool. So I don't know. I hope that answers that question about the having a driver's license. I mean, typically the state that you're domiciled in should issue everything, including insurance, driver's license, all of that stuff. The driver's license does give you a tie to the state, so that could be a concern. Yeah. I'm part of a garage villa association where people store their motorhomes, and I have a question regarding the tax filings. What do we do as a homeowners association? We're getting different opinions from different people, and I'd be interested in your thoughts. So I don't deal with HOA taxes very often. I deal with nomads, and so that's typically not an issue. Um, the HOA is required to file a federal tax return. It's the 1120H, and that's the only thing I really know about that. I have never filed a homeowners association, and that would not be something I would feel comfortable with, or give more information on, since that's something I'm not familiar with. I would have to do research. But they do file a tax return. The HOA does have the requirement. Let's see. Next question. I've had a single person LLC for several years. My husband quit his job, joined my business, and we became full-time digital nomads. One of our websites focused on a specific location, and we spent 3 months there on the ground doing research. Our tax preparer told us that because my husband is not officially part of the LLC, we can't deduct his travel. Well, that would be my first question. I'm not, yeah, what kind of travel are we taking here? Is this just like mileage, or, are we flying to a location and renting a space? Like, are we duplicating expenses? So really travel related to business, you have to be duplicating expenses to take it. So are you leaving your home behind, right? And our home can be an RV, things like that. But are we leaving that behind and duplicating expenses by traveling? So that would be my first question to clarify this, because otherwise yeah, I don't have all the information. So can we add him to the LLC? Um, there's a couple of things there. So if you add him to the LLC, you actually have to basically get a new EIN, and you're now creating a partnership. So a husband and wife LLC is actually a partnership. And I'm going to share with you a link in the chat, because this is a common question I get. So that is a common question I get, and you automatically become, two-person LLC becomes a partnership. So you have a separate tax filing to deal with. Again, I would go back to really understanding what the travel is that you're trying to deduct, because that would be a better way for me to clarify on this question. Anyways, if you did choose to add both husband and wife to the LLC, you are creating that partnership. So you have a separate tax return, and you have, separate obligation to file. It's a partnership return is a 1065, and it is due March 15th. And if you file an extension, it's due September 15th. So it is a month prior to our personal returns. The other question, otherwise, do we keep it as is and just pay him a salary, or a 1099? So you can pay him a salary, and if the business is doing well, that's possible to pay a small salary, or commiserate to whatever the work is doing. You can 1099 him. I don't see the benefit, of doing that. Again, I would really go back before I'd recommend changing up all these things, or creating a payroll, or creating a contractor, 1099 situation. I would just go back and try to learn more about the travel deductions. So that would be, yeah. Again, if you're taking travel deductions, you have to be duplicating expenses. So if you're going to where your business is based, then most likely you're not you don't get to qualify for travel deductions, because that's the home, that's the tax home of the business. So yeah, that would be my clarifying questions on this. Hopefully that answers that question. And we are 1099 contract workers. Are we required, or is it necessary to file quarterly estimated taxes? So first off, you don't file anything. Quarterly estimated taxes are simple payments. So in the US, we have a pay-as-you-go system, and that means that you have to be keeping up with your tax payments throughout the year. And if that applies to you, if you think you're going to owe at the end of the year, so many times small business owners, which 1099 contract workers, guess what? You're a small business owner. They do owe taxes at the end of the year. So we have to make those quarterly payments in order to keep up with that. If you fail to do that, if you fail to pay in enough, you actually do get underpayment penalties. So I strongly suggest making estimated payments if you think you're going to owe based on your situation. And I can't really say yes or no one way. It's not an always case. Not every 1099 contract worker, right? Depends on what else is happening, right? So even though you're a small business owner, do you have a net profit? Is it high enough to owe taxes? Is there any W-2 income? Is there any other income that's being paid withholding? So are we paying in estimated payments basically through another job, or through retirement, withdrawals, things like that? So there's lots of different variables in this. So I can't say for sure yes or no. But yeah, making estimated payments is important if you think you're going to owe. And just so you know, the estimated payments are due April 15th, June 15th, September 15th, and then January 15th of the following year. So once we close December 31st, you have that final payment in January. And I know that throws a lot of people off, because they don't really match the regular quarterly system, right? April and June, and then September, January. So hopefully that helps answer that question, or maybe just gives you more questions. But if you do have any questions, again, feel free and to drop them in the chat if you're here live. I do just have one more question to get through, and then I am going to sign off if I don't see any other live questions for the day. So last question that I have prior to today's um, Tax Tuesday. What is the difference between an S-Corp and an LLC? So I could probably spend an hour talking about the S-Corp and LLC differences, but I'm going to try to keep this short. And basically, an LLC is a legal type of entity, right? Legal type. So we're talking about the state. And you would register with the state, Secretary of State, most likely. And this will be, I'm just dropping some links in the chats here. So an LLC, yeah, legal entity, right? S-Corp, taxable entity. That's the first big difference. S-Corp is a tax election, and that's really the difference. So an LLC can be taxed as an S-Corp. An LLC generally, if they are a single member or sole proprietor, right? Sole member, only one person, you are a sole proprietor, and so you file a Schedule C for that business. However, a single member can choose to be an S-Corp, right? So the taxation can now change and you become an S-Corp. So you are an S-Corp for taxation purposes. There are lots of rules and regulations that go along with this. So please do not take this lightly. It is not for everyone. I work with many S-Corp owners, and I also work with people to determine if it is the best fit for you or not. And I am going to share this little, have another link that talks about S-Corps, because it is, yeah, it is not to be taken lightly. It is lots of regulations around it. You have to pay yourself a salary, all kinds of things, a separate tax return, just a lot more complications. So I don't recommend it for everyone, but that's really the main difference. So S-Corp is a taxable tax election. LLC is a legal entity. So the LLC can be taxed as an S-Corp. An LLC can be taxed as a sole proprietor if you're a single member, and an LLC can be taxed as a partnership if you have more than one member. So even a husband and wife, like we were talking about earlier, can be taxed as a partnership, right? LLC, 2 people, 3 people, 4 people, 10 people, you're a partnership. So that's really the biggest difference. I don't want to dive too deep into S-Corp versus LLC, but yeah, keep in mind legal entity versus taxable entity. If I don't get any more questions, that's all I got prior to today. So if anyone is here live, and I thank you for joining me live this morning, wherever you may be, it is morning for me. And if you have any live questions, feel free to drop them in the chat right now. I do have a few more minutes. I'm happy to stick around. And if not, I will see you at the next Tax Tuesday, which will be September 3rd. Same thing, 10 a.m. Mountain Time. If you have questions that did not get answered today or that come up in the next month, feel free to submit them online, and I will add them to September's roster to answer. I thank you all for attending live. This has been a great session, and otherwise I'm going to sign off if I don't see any other questions that come through live.